When Robinhood pulled the plug on GameStop trading, millions of retail investors realized a brutal truth. You do not own your assets. The brokerages own them, the clearinghouses own them. The centralized system dictates when you can buy, when you can sell, and when you get wiped out. But behind closed doors, a corporate revenge plot was being coded. Robinhood didn't just accept the limits of the legacy banking system. They spent years planning to bypass it entirely. And this week, they dropped a financial nuclear bomb. They didn't just launch a new feature or list a new coin. They built their own sovereign, multi-billion-dollar highway straight into the Ethereum ecosystem, Robinhood Chain. Traditional stocks, ETFs, global real-world assets, all of them, stripped from the legacy settlement systems and minted directly on-chain as ERC20 tokens, running 24/7 with absolute self-custody. The media thinks this is just another crypto app expansion. They are completely blind. This is the ultimate Trojan horse. Robinhood isn't bringing crypto to the masses anymore. They are migrating the entire $100 trillion stock market onto Ethereum. You're watching the Signal and Noise podcast. I'm known as Newell. Let's break down the institutional capture of the financial grid. All right, let's look at the numbers because the data coming out right now is flat out ridiculous. Within just a few days of the Robinhood Chain mainnet going live, the volume of ETH being bridged from the Ethereum mainnet onto this new Layer 2 network skyrocketed by 10 times. As we speak, the total value locked is aggressively pushing toward the $100 million mark, and the network has only been functional for a hot minute. Why is this happening? Because retail capital isn't stupid. For the last few years, if you wanted to exit the traditional banking system, you had to jump through a dozen hoops. Robinhood just consolidated that entire multi-step nightmare into a single, seamless, non-custodial wallet user experience for tens of millions of users worldwide. But here's the real signal that the mainstream media is completely missing. Look at the technology choice. Robinhood didn't build a private database. They used Arbitrum's Nitro technology stack to build an official public Ethereum Layer 2. Think about the sheer weight of that endorsement. A major, publicly traded US brokerage just looked at every single financial infrastructure on Earth and decided that Ethereum was the only base layer secure enough, liquid enough, and battle-tested enough to anchor the future of global equity trading. Now let's talk about the noise, because if you flip on CNBC or scroll through standard financial feeds, the talking heads are treating this like a minor product upgrade. They are running headlines like, Robinhood attempts to boost retail trading volumes with new crypto chain. Or, you have crypto purists on Twitter complaining, oh great, another Layer 2 ecosystem. This is pure, unadulterated noise. It's a classic case of people staring at a single tree while the entire forest is being cleared. The media wants you to believe that this is about giving retail users a cheaper way to trade meme coins or farm DeFi yields on a new network. They are treating it like a playground. But let's pull back the curtain on how corporate infrastructure actually scales. Robinhood didn't spend millions of dollars in R&D just to compete for current crypto volume. They are looking at the legacy settlement system, the clearinghouses, the T+1 delays, and they realize that the legacy system is an absolute dinosaur. By tokenizing real-world assets directly on an Ethereum Layer 2, they can achieve near instantaneous settlement at a fraction of a cent. Running 24 hours a day, 7 days a week, 365 days a year. No market closes, no weekend halts. When you understand that, you realize the noise about crypto feature updates is completely irrelevant. The actual signal is that the structural plumbing of Wall Street is being systematically replaced. Let's talk about what this explicitly means for Ethereum holders, because this is where the economic flywheel gets incredibly aggressive. Every single time a user trades a tokenized stock on the Robinhood chain, every time an ETF shares a dividend yield on-chain, guess what token powers the gas fees? Robinhood Chain uses native ETH to settle transactions and pay for data availability. It utilizes Ethereum blobs to post proofs to the Layer 1 ledger. This means as millions of traditional equity investors start trading tokenized Tesla or S&P 500 tokens, they will be unconsciously driving transaction activity and burning fees. It completely upends the traditional valuation models for crypto assets. For years, skeptics argued that Ethereum's utility was purely circular. But what happens when the activity isn't a speculative dog token, but the literal trading volume of the world's largest public corporations? The network utility becomes foundational to global commerce. But it gets even deeper. Robinhood silently integrated a feature that should make every legacy banking executive sweat through their suit. They built this for AI-powered agentic accounts. In the legacy financial world, an AI agent cannot open a traditional brokerage account. The legacy system requires a human bottleneck. But on an open Ethereum layer 2, an autonomous AI agent can hold its own cryptographic keys. It can interact with smart contracts natively. Robinhood is paving the way for an entire ecosystem of autonomous AI agents to manage portfolios and trade tokenized assets completely independent of human intervention. This is the shift from the attention economy to agentic commerce. The old world is trying to figure out how to regulate AI chatbots. Robinhood is building the bank accounts for the AI economy. Look, the ultimate takeaway here is simple. The migration is no longer a theory. It is happening in real time, right in front of our eyes. You can stress over minor price corrections, or you can look at the structural signal. The largest financial platforms on the planet are choosing Ethereum. First, it was the multi-trillion-dollar European banking cartels. Now, it's the dominant retail brokerage in the West building a dedicated layer 2. The old financial world isn't going to collapse in a sudden explosion. It is going to be quietly, efficiently, and systematically hollowed out from the inside, until every stock, bond, ETF, and real estate asset is running on an Ethereum-backed rail. The signal is clear. The architecture of global capital is changing ownership. The noise is everything else. Make sure you hit that subscribe button, smash the like, and leave a comment below. Are you moving capital onto the Robinhood chain? Let me know. Until next time, stay analytical, focus on the signal, and ignore the noise.